right, and good morning. Welcome to another episode. This is Money Matters. My name is Nev, and today is Tuesday, December 1st. Happy December 1st. Hey, today is a big day for Ethereum. ETH 2.0 has launched officially today with as many validators out there as they can possibly get in this time. So we're going to be taking a look, of course, at the price and what it might mean for you as an investor, this whole ETH 2.0. So we're going to be discussing that today. But of course, we're not only going to be discussing that, we're also going to be taking a look at the chart. You might recognize this one. This is what we just talked about, but it looks even better logarithmically speaking. And what does it mean being so far off the latest or high that we've seen in 2017? And what does it mean with Bitcoin actually hitting the all-time high in comparison to any other coin? Of course, we're going to be taking a look at that. There's some additional news that I want to share with you that has to do with Facebook. That's right. So if you're a Facebook user or lover for that matter, you definitely want to stick around for this. And if you are planning on borrowing money anytime in the future, there is breaking news about that, as well as LIBOR officially has been announced that it is going to die in 6 months from now. So there you go. This is the news. This is Money Matters. Let's do this, y'all. And good morning and welcome to another episode. If you're brand new to the channel, do me a huge favor, smash the subscribe button. If there's some sort of bell notification, hey, hit it as well. And if you like the content, if you could help me out, that would be amazing. Smash the like button right about now. It would really help me out a great deal. All right, so I've hinted on a few different things, and first thing first, let's take a look at what's going on in the market. So as you might know, Bitcoin actually has hit the all-time high. We've come down since then, and we'll see charts in a few moments. But right now, currently at 7:27 Eastern Daylight Time or Standard Time, I don't know which one is it. It's 7 o'clock in the morning. All I can tell you. Bitcoin is standing at $19,257.04, up 2.2% for the 24-hour period, at 5.3% over the course of 7 days. But it is down 2.2% over the course of last hour. As you may know, you've likely heard, we did hit and break the all-time record. It did come back down, and now we're about to get into the very uncharted waters out there, and the ride is about to get even more interesting. We're going to take a look at the charts in a moment. Ethereum is sitting at 6,000. Woo, yeah, that might come soon enough. $603.73, up 1.5% over 24 hours, but it is down for the hour as well as for the day. XRP is up 24 hours, still sitting pretty at 63.9 cents. LTC is at 86.84, pumped a whopping 8.6%. Congrats for the Litecoin. Bitcoin Cash is up 3%. Link is up 1%. ADA is down. DOT is down. So we're seeing a little bit of mixed reviews happening over here, where we take a look at what the biggest gainers are for the day. Sushi shows up yet again at 17.4% over the last 24 hours. BTT is the next coin. I don't even know what this is, y'all. I have no clue. BitTorrent, maybe? 7.4%. Litecoin is in third spot at 6.3. Nexo at 7. That doesn't make sense. Again. CoinGecko has done it again. Nexo and Ocean, or actually Nexo should be in the third spot. LTC in the fourth spot at 6.3, and then Ocean at 6.1. See, they're toying with my emotions over here. I think I can rely on the data, but you can't. You can't rely on the data. You gotta check and verify, right? Check and verify. We've learned something new right now. At least I did. On the biggest loser side, Digibyte is down 6.8. NMR negative 4.0, which should be in the third spot, with the dash being in the second spot, the negative 5.5. So I don't know if you get the same thing with the CoinGecko. I really like them, but this is quite annoying. Now, one of the things that we did see is, well, Bitcoin. So let's take a look at what's going on with the fancy schmancy Bitcoin. And as you can see, we did have a beautiful trading channel that we were talking about even yesterday. We broke over that puppy, and we did hit something very important right over here. I think you can see it. Let me see if I can change the color to make it a bit more prominent. But right over here, what do we have? Well, my friends, we have a double top, and we've just broken down through that double top, which means that we are basically, not only did we break over the 50-day moving average, but we also broken below the 200-day moving average, and it is coming down, as you can see. So this was part of the challenge that, when you hit the double top, we've seen it before. We've seen it before right over here, right? And in this particular scenario, we did, let me get where the measuring tool. We did go down, what is that, like 17%, something like that? I don't know why it's not, come on, work with me. 99%, please. Child, please. All right, y'all. TradingView is toying with my emotions. See, if they could just move this red little thingy up here, that would be quite lovely, because I can't see where my cursor is. All right. So I am clearly having challenges with technology. But as you can see, we did go down some 17%. Well, if we were to go down 17% again, what is this, 17%? We would come back down to about 16,300 plus minus. So clearly we could expect that we might have a few different supports. One of them would have been this neckline right over here, which clearly we have broken through, as you can see. Let me see if I can make it pretty. We have broken through right here, which was at 18.6. We seem to be coming back down, even though some of see, this is the part of the challenge with the exchanges. Some of the exchanges are still reporting at that 19,000 something. Some are actually dropping into the 18,000 level. So this is definitely a piece to pay attention to. The next level, I think, of a support could be right here in this. Nope, no, not you, my dear. Not you, my dear. Let's eliminate this guy. Could be right here at $17,378. So we've broken through a support at 18.5. Next stop would probably be 17.3, and then the next stop that I think would be about 16.2, 16.3. So something to pay attention to. It's going to be a wild ride, and it could potentially come back up. It could bounce off, and we could potentially see it start kind of going back into this channel. But again, for right now, it's quite uncertain as to what is going to happen. So as you can see, we are looking at the 15-minute candles, and right now it's one of those interesting components. Could it dip more than 17%? Absolutely. Bitcoin has done that before in the rallies, and we could expect to see that. If that is to happen, y'all, if that is to happen, we are looking at what? Well, we're looking at about 12,000 something. So don't pay attention to this stuff. That would be the next sort of spot to get into if we are to break below and go into that 30% dump, if you would. Now that would be a big dump on the whole piece. Now, one of the things that is also interesting to note is that, as much as the traditional trading is still very much alive, and the markets actually have rallied pretty nicely yesterday, if you've been paying attention to that. So they're doing pretty okay, pretty well actually. We are seeing some of the stocks are doing really, really well, incredibly well. One of the things that also there's the whole like, what's going on? Are we going to crash? Are we going to lose money? If you are brand new to cryptocurrency and Bitcoin, this whole like we're up, we're down, and in a very short period of time is probably toying with your emotions a lot. And while I can't tell you exactly how things are going to play out, nobody can, especially when we start hitting these brand new highs. And I think we're going to keep hitting that high and we're going to sell off. I'm going to keep hitting the high and sell off. And that's going to keep happening as long as there's people that are set up that have substantial amount of money that are set up and have their Autobots ready to basically sell at the all-time high. And why wouldn't they? If they bought at a penny or a dollar or even $10, even $100 or $1,000, they're making a handsome profit. So they likely don't want to risk all of their money in this whole piece when we start going on up, right? So that's something for you to understand. But here is an interesting thing that came out of Travis from Twitter. And here's what basically has a beautiful chart of what actually has transpired. And this is about following the price of Bitcoin and how different individuals and groups and businesses are jumping in. And you can see that we're seeing where whether they're financially jumping in or very much supporting it or a combination of the both, you can see that folks have been kind of jumping in. And as the price keeps on going up, they actually keep jumping back in it yet again. So we've seen Morgan Stanley and JP Morgan. We've seen Jim Cramer, which you might have mixed feelings about him, as I do. I personally do. Sorry, Jim, but I do. PayPal, Citi, Druckenmiller, BlackRock, Bernstein, Guggenheim, BTIG. I mean, you can see that folks are definitely jumping into this Bitcoin trade. And that's the reason that when they join this whole thing, well, their money tends to be sticky, much stickier than ours. Then we also are seeing folks are actually fleeing gold. You likely have heard the story, but now you get to see the chart as well, where the exchange of the gold to the Bitcoin has actually been starting to reverse, where people are selling their paper gold especially, and they are starting to get into Bitcoin. Now, I don't know if they're selling physical gold yet. I haven't confirmed. I've just heard that they are doing that stuff. And of course, we're also seeing an interesting piece that the exchange whale ratio, the 90-day moving average, is actually at an all-time low. So the prices are going down, but everybody kind of has this bottom piece. And so we'll see what this is going to happen. We're seeing this big divergence of the Bitcoin price as well as the exchange ratio. So this is also not a bullish trend. Again, when we hit these new highs right over here, let me see if we can take a look into it. Well, you can expect that it's going to be very, very volatile, and volatile it is, as you can actually probably see it yourself right over here. We are seems like we are starting to print maybe a green candle, so maybe this 18,600 level is going to be a support, and so we could see ourselves bouncing maybe between this like $20,000 and $18,600 level into this channel as it actually starts consolidating. And this is a very good and healthy thing if this is to move anywhere, because if it was to move too high too fast, that is highly problematic. Now, one of the things that I did share with you is that there is also an important thing that is happening with Ethereum. This is and should be the breaking news of the day, as Ethereum 2.0 launched this morning. That's right. So here we go. What does this all mean? If you already know and you are like, I'm already invested in this stuff, I know how it all works, then cool, go grab some coffee and come back in about 5 minutes. If you're brand new, you definitely want to stick around. The biggest update to Ethereum network since its inception, of course, is happening today. and they needed validators, which they got, and they are moving into this new era of Ethereum. And the phase zero has officially begun today. So hey, happy birthday, phase zero ETH. So don't forget to update your ETH2 client in a couple of days. That is for folks that are actually programming on top of Ethereum. So that's something important for you to know. But what is Ethereum 2.0? Well, the upgrade is supposed to boost the speed, efficiency, scalability of the entire network, and it's going to come in multiple phases. The phase one is just really to get the validators into the whole thing, because it's switching from proof of work to the proof of stake. And today we're going to explain what the hey does all of that mean. Now, of course, the move is set to greatly benefit Ethereum and many projects that operate on the blockchain, because right now it has sort of the maximum things that it could do. And so for scalability reasons, well, it actually has to kind of shift into something different. Now, the proof of stake mechanism will basically go completely opposite of what they've been doing so far, which is proof of work. The proof of work basically means that the validator or the miner has a computer, and that computer has to solve a very high level problem and figure out this magical number that can't be higher than this and lower than that. And the first one to do it is the one that actually gets to generate the block, verifies everything in it, broadcasts it to the network, and of course earns some ETH as a reward. Bitcoin operates very similarly, not exactly the same, but very similarly. Now, this is the part that they're saying, well, this is very draining when it comes to the whole component, because it consumes energy, it takes a lot of power and all of that stuff and problems. Now, of course, the proof of stake is much more efficient way to transact and to become validated. Validators simply propose a block based on how much crypto they hold and how long they've held it for. So it kind of takes the longer you've been on the network, the more you have earned or hold or can afford to buy. Then you get to put it in and validate. So people are very, very excited about this thing. Of course, it's going out there now. It's sort of the testing of the whole thing, so to speak, right? The proof of stake also means that there won't be as much computing power needed, and it means that it's going to go much faster. Of course, the next thing they want to do is they want to go in and sort of do the sharding of the thing, so not everything sits on one thing. And so this should, in theory and hopefully in practice, make it even more secure and potentially faster. But we'll see how that all works out when it happens. If you're invested in Ethereum and are simply happy to hold, trade, or use your cryptocurrency as a decentralized app, you don't need to make any changes whatsoever. Everything stays the same. So if you're hearing about the ETH 2.0 and you were like, but I have ETH 0.1, like what do I do now? No worries, it still works. It still works. You don't have to give it out there. And please, 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 I think this is very, very important, especially for the newbies. Scamsters are everywhere. And anytime they can take some money from you, they absolutely will. And so if there's anybody that comes in and says, well, that ETH.1 that you have, if you purchased it before December 1, well, it's broken, it doesn't work, you should give it to me. I know that the price is $600 or $1,000 or whatever the price ends up being when they do that for you or to you, but I am willing to give you $200 for it. Don't fall for the scam. I know that there's going to be somebody who's going to do it. I know there's going to be people that are going to fall for it. And so hopefully you are watching and listening to the show right now. And so when somebody approaches you, like, I know better. Thanks. Goodbye. So don't fall for those scams, all right? It works. You are fine. If you are interested in taking on the new Ethereum network, and you want to be part of the validation component, well, there is certainly an opportunity for you to begin staking with the Genesis phase, with the phase 0, right? And instead of waiting till phase like 17 or whatever. And the validators have to commit 32 ETH, so you have to have at least 32 ETH. You commit that ETH to Ethereum 2.0 blockchain, and of course, then you can become part of the validation piece, and can earn also some rewards for doing that. And so many of the individuals who have 32 ETH or more, who are planning of like, I'm just gonna hodl this for forever, are doing just that. And of course, we do have a lot of room for optimism in the ETH space. Now, this over here is the Ethereum chart. Let me see if you can see it. And this was the all-time high right over here at, I don't know why this is saying 350. What in the world? I know that this is not accurate. What is this? Oh, this is the percentages. Sorry. I was like, why is this saying 350? I'm like, I know it was 1,000 something. So the all-time high was what? $1,300, something like that. Is that about right? Yeah, 1352, right? And right now we're toying with that 600 and stuff. So we still have about 55, 60% to go up in price, up in value. And if you have been following the channel and following what I am saying, and sharing with you, this particular formation, when it does this is incredibly bullish pattern, especially long term. It basically means that we've had this super nice bottom, super long accumulation phase, and now we're actually able to explode and really reach brand new highs. Of course, it's not going to be a straight line. It's going to be up and down. So let's take a look. Let's take a look at the Ethereum chart over here. So here it is. We're looking at the weekly candles in this particular chart, and you can see that we are looking basically at all of the data. And if we take a look at the logarithmic view of the whole thing, you will see that the pattern of the chart, which is also known as chattern this morning, is you can see that there's definitely some like moves up and down, but it's a nice sort of movement in the whole piece. And then of course, if we take a look at where we are and start zooming in, let me see if we could start zooming into this stuff. Hold on, and let's switch it to the 1 hour. Woo. 1 hour chart, and we are seeing a bit of a dumping grounds right now, which is okay because we did pump a little bit more. And so if we go in and take a look at this, right, we do see some very interesting pattern right over here, right? Can you see it? It has a nice little support, and whenever it it's supposed to kind of trade in the within the channel, and when it moves out of it, well, it comes back down. So you can actually see very easily that that's kind of what is happening, right? And so right now we have actually broken through that. We actually have broken through the 50-day moving average, as well as the we're touching on a 200-day moving average. So if it breaks down below it, then we're going to see the price probably come back down into about low 500, high 400 level. But I think it will bounce. I think it will bounce off. And the reason I say that is because Bitcoin and Ethereum are very much connected. Grandpa and grandma, I guess. And so when one sneezes, the other one catches the cold. And so we're kind of seeing that happening a little bit. So I think, if Bitcoin actually bounces off of its little sort of tumble, then Ethereum will have an ability to do that as well. But we'll see how that turns out. And of course, nothing I say here is financial advice, nor should be used as such. All right, fair? We've covered that. We agree on that. All right, cool. So one of the pieces that I did want to share with you is that it has to do with lending. And the Federal Reserve is saying that the key bank lending rate will be phased out by June 2023. But of course, the banks need to stop making those loans no later than June of 2021. So in about 6 months. This is incredibly important if you're going to be playing within traditional finance. And some people are, right? You're borrowing money for a car, for a house, for credit cards and that kind of stuff. And what is happening is that up until this point, we have been using a thing called LIBOR. I'm going to explain what it is in case you don't know. If you do know what it is, well, again, go grab some more coffee. Maybe decaf this time around. I don't want you shaking by the end of the show. But it's going to be phased out and eventually replaced by June 23. Banks should stop writing contract using LIBOR by the end of 2021, after which the rate no longer will be published. And they're actually saying that the contracts using LIBOR should wrap up by June 2023. By end of June 2023. So this is going to be one of the important pieces that if you're borrowing money, you want to pay attention to what kind of rate are they giving you, because if they can't give you the correct rate right now, they're going to have to switch you over at some point during contract, which could potentially be not as advantageous for you. Now, the interesting piece, and I'm going to talk a little bit about, I don't know why this is happening because you can't really see stuff. All right, maybe this is better. LIBOR is calculated from an average of banks that participate in overnight lending to each other. The rate is critical for short-term funding that financial institutions use for their operations, but we've seen a little bit of controversy over the years, particularly in the role that it played in the 2008 financial crisis, and then again in the 2012 when the banksters used it to manipulate it to make profit. Shocked. I know. Me too. LIBOR was at the middle of another scandal in 2012. Several banks, including some of the largest in the world, JP Morgan, were found to have been manipulating LIBOR rates for profit. Transition away from LIBOR, what is called security overnight financing rate, or SOFR. When I say JP Morgan, I don't know if I can't remember who did it, but I know that some of the biggest banks were all involved in it. And semi-jokingly, I did say JP Morgan because they seem to be involved in a scandal a week. Then we find out, and then you only find out, how much percentage of what is actually happening. Who the hey knows? So, secured overnight financing rate, or SOFR, will use the rates that investors offer for bank securities such as loans and assets backed by bonds. And this transaction will take place under the New York Fed's auspices of its bond repurchase market. So this is something for you that is very interesting to understand and note. And there is a very good and interesting kind of strategy, if you would, that has to do a lot with cryptocurrencies, right? That if you're holding part of your wealth in something like Bitcoin, which curiously enough, I did want to take a look at what's going on. And nicely, it looks like we're bouncing off of this support level right here, which is quite beautiful. So maybe we'll just enter the channel yet one more time. So that's exciting piece. That's a very exciting piece. But interesting piece to note is that when you go in and you're able to hold some of the wealth in some of the assets that actually can appreciate and preserve your wealth over the long time, then even if you have to go and refinance, you might be able to actually pull some of the cash from some of the holdings that you have, repay the stuff, and maybe get a better loan. So that's something for you to kind of think through and pay attention to as a strategy. And the final piece today, I do want to share with you about Facebook. Well, they're making a brand new acquisition worth $1 billion, and they're have acquired a company, a startup company called Customer with a K, as opposed to with the C that you would typically spell it. And they're looking to basically, they are the startup that founded with the aim of disrupting the customer service industry to a new approach, providing agents with better user data. And so that's what Facebook wants to do. If you want to read more about it, you can actually find this article on the TechCrunch. So TechCrunch can actually give you information about this, but they are wanting to basically expand into customer service tools because they're starting to get more and more into serving businesses, although not really well, in my humble opinion. And now they're also looking and saying, well, we might actually charge businesses for the CRM version of the whole thing. So not only are you going to be paying through the nose for the ads that can be blocked anytime, because many companies have complained about their AI going completely ballistic and destroying their ability to make money over the Black Friday weekend. But now all of your followers are going to become your quote unquote users and customers, and you're going to have to pay for that. So it's going to be an interesting move, and we'll see how it all turns out. But of course, they're still facing that potential of, will they even be disbanded as a company because of what's going on, with their whole antitrust. Now, one of the other pieces that you may or may not know is that Facebook has also been fined $6.1 million in South Korea for sharing the data of 3.3 million users without their consent. So there they are, yet again, breaching the data protection and privacy laws, but they're acquiring the customer stuff for the businesses. So now they're going to know exactly whom you sell to, how much you sell to, who your customers are, and everything else, and likely start selling it to triple on their income. Why not? Some of the information the social media giant has shared include users' names, academic history, hometown, relationship status, and job history. So there you go. They are at it again, sharing yet one more time. Final piece. I did say final piece was the whole Ethereum, the Facebook stuff, but it's not. I did want to close it out with WiFi coin because we looked at it over here, so it's been kind of interesting for me to follow it. We did have this beautiful triangle formation right here that broke out, and we did get to play around with it and see it. And as you can see, it really played nicely, and Wi-Fi actually since that breakout over here has gone up. What? See, this is part of the challenge. This is part of the challenge that I am having here with the trading view. Come on, trading view, work with me, man. From this breakout of up until the high, it went up what, like 20%? Yeah, 20%, something like that, 25%. But since then, well, we have actually fallen since then. Healthily, we have fallen because everything else is coming back down. So we have gone from $28,357, and now we're trading at $24,430. So it'll be kind of interesting. But this seems to be also another healthy support level, and let me show you, for everybody who is watching this right now, let me show you what I mean. As you can see, we've had oh, come on, go away. We've had nice sort of like ceiling, if you would, resistance, if you would, right over here. And as you know, that often the resistance, once broken through, can prove to be a support level. We'll see if that's going to hold up. But as you can see, YFI did break through 50 and 200-day moving average, but looks like it is bouncing off of the, let's see if it is. It looks like it might be bouncing. Yes, it is. It's bouncing off of the support level at 24.4. So that's quite lovely thing to note. So, hey, thanks for watching. I hope you're enjoying this stuff. I hope you get as geeked out as I do about this stuff. Do me a favor, sign up for the channel, right? Subscribe for the whole thing. Hit the bell notification. If you're liking the stuff, smash the like button. It actually really helps me. These algorithms are nearly impossible to break through, especially in 2020. So if you could help me out, that would be amazing. Until next time, stay forever money blessed, and do remember, you are only one.